an embedded finance user case, or an example of how fintechs can actually innovate and refresh a whole industry. Because today, everything, as we all know, is in some way a fintech. Companies are realizing this and using it as a retention tool across industries. You can see a supermarket credit card, a Uber card. It's everyone's into it. And we all know the saying that money makes the world go round. It's actually the transactions that do that. The interactions, really. We started out with stones, we went to coins, bills, cards, and now we use our phones and our watches to pay for things. We're constantly evolving, and fintech is about exploring these new limits, pushing how far we can go to purchasing and interacting with one another. How do I interact with my money? This is what digital banks, neobanks are doing.
You can essentially have a buy now, pay later company and, hey, we're going to spin up a satellite office with a few people and try to go and attack the market. It's just not going to work, right? There's too many nuances. And what we provide is 4 monthly installments for consumers to pay over time with no interest and no fees. One of the things that I think that's been really interesting as we've kind of developed our product and developed our relationships with retailers is that you cannot just simply go and say, look, we're going to offer debit and credit cards, right? It's just not an option. Cash is prevalent there. And it's another reason why if you are a larger buy now, pay later company, your only option to expand to some of these, what I call, lesser known countries, right? Not US, not Europe or Australia. You need to go in with full force and make sure you have local representation. So all of our employees are based in Pakistan. Most of them are from Pakistan and have relationships there.
Talking about cryptocurrency going mainstream, with the Visa and Mastercard really announcing support for cryptocurrencies on their payment networks. It's just one more step for the mainstream arrival of crypto. Now with the Coinbase IPO, it seems like the continued mainstreaming of cryptocurrency is going to be inevitable. But what's the true impact of these significant developments, and what will it really take to keep everything going?
Digital banks where you can, visit FAQs, check out their social media, and get the information that you needed regarding your finances. Kind of helped a lot of people adopt and go towards the way of digital banking. Also, investing. This was another trend that I paid attention to during the pandemic, right? A lot of people believe it was because of the stimulus checks and excess in cash that more people began investing. I also think it was the spread of information, like Reddit, forums, Twitter, different means where users would gather together and spread information and begin to make decisions as a collective. Those were the two trends that I really spotted. And I think they'll continue, especially now people learning from trial and error in terms of investing and also adopting and going with new digital banks. There are a few digital banks since the pandemic that are now offering more products and more solutions, such as credit cards or mortgage lending. So I think the new users that they capture, they'll continue to provide solutions for them and continue to grow their user base. So that's pretty much the space we're in, and analyzing that and trying to provide more solutions to help those consumers as well.
It's frightening, that shift to digital, that push to digital. And actually some of our data suggests that, in the first quarter of last year, there was a larger shift to digital in 10 weeks than what we'd seen in the preceding 5 years. I mean, that's crazy. Today in Europe, and I appreciate this is a European stat, so bear with me, but 80% of card present transactions are contactless. So there's a lot of things that, and COVID-19 has played its part in driving that innovation. I feel terrible saying that, but I mean, take that in the sentiment that it's meant. There's been continued evolution as a result of what we experience and continue to experience at a market level. And I thought it would just be remiss not to mention that in this discussion.
I think we've seen a number of these fintech players step into the space, and I'll use PayPal, Square, Revolut as great examples, who have also made announcements and who have also supported crypto directly for their customer base. And I think this is really driving a lot of the traditional financial institutions to explore where and how they fit within this ecosystem. And what we're seeing, I think, in a number of the Western countries is this concept of banking as a service from the traditional banking space. And there's a lot of banks that are out there saying we can't necessarily compete with these fintechs from a customer experience, a customer acquisition perspective. And so rather than trying to compete with them on that level, we know that they need banking services on the back end to provide these types of solutions to their end users. And so I think we're now starting to see a lot of these banks monetize the banking services on the back end and partnering with these fintechs versus trying to compete.
Financial institutions aren't servicing their needs. Like a good example of that is Kraken, which is a really big cryptocurrency exchange in the United States, who have launched a bank now, which obviously will power their exchange and be their primary method of accessing the U.S. financial system. So it's a very interesting kind of end run around the banks in that regard. And then there was, a more sort of another recent example was like Lending Club bought Radius Bank. So there's some interesting plays happening where those fintech companies are seeing opportunities to actually literally displace the financial institutions. So not quite what you were saying, but I think there's a lot of interesting trends. The fintechs, the more they get embedded in the banks, the more some of them are seeing the opportunity to flip the banks, which I think is quite an interesting development.
So we are building 401ks that invest in stocks directly instead of relying on restrictive funds. And so what that allows us to do is invest according to your own financial goals and according to all of your own ESG values. So we can divest from fossil fuels, investing more heavily in companies with good racial diversity or gender diversity metrics. We can exclude specific companies or include others. Essentially, we can customize it to you based on exactly what you believe in and what your financial goals and ability to save and spend are. So meeting all of your liabilities long term, which is quite important for retirement because this is, a lot has come out of COVID, but I think one of the biggest trends we've seen is, people wanting to engage more deeply with their money because realizing that our financial safety net maybe wasn't as strong as we initially thought, and needing to plan for the future because we don't know what that holds anymore. And so trying to give people, more control over their 401ks so that they can truly own it as a central part of their financial wealth. So instead of it existing in a silo, bringing it into the fold so that you can actually see it as a core part of your financial future.
Technology is enabling anyone to become a bank nowadays. And thanks to that, what we see is that many people are actually starting to issue payment credentials of financial services. And I think the biggest one or the biggest lead that I see in Asia are around e-commerce website. I think that's one. And the second is the gig economy. So I would say local Uber called Grab or Gojek. There's not a day without an announcement. I think one was just published during this this event that AirAsia, the leading airline, is acquiring Gojek in Thailand to become the leading super app and offer every kind of financial services in Thailand, basically. So there's not a day without merge or rumors about who is going to be the winner to offer all kind of financial services in this gig economy. So that's for me by far the biggest driver. But any people that are moving money, in fact, are part of this ecosystem. So asset managers, cryptocurrencies, gaming companies, there's opportunities everywhere.
The larger players, they're fully embracing the embedded finance type of thinking because pretty much every larger exchange out there is now launching this crypto as a service offering, right? Which means, and pretty much every financial institution, think of every asset manager, think of every broker, think neo broker or legacy type brokers. it's most likely that they're not, building the entire thing by themselves. They're partnering with these crypto companies and embedding their crypto as a service offerings into their platforms, so that they can just provide, cryptos as a new asset class to their customers. And through revenue share, they're able to generate revenues. So the crypto industry, they're fully embracing this, because they themselves, they're an ecosystem, and now they're trying to embed themselves into the financial industry.
It's about visibility, and it's about education. So before we can get mass adoption, obviously, it's about educating the user base. And I think major players like Visa, MasterCard, and major banks that are getting in the space, it brings a lot of visibility. And ultimately, it brings more credibility and potentially trust to the space. So for general users and or B2B enterprises, this brings a little bit more confidence, I think, to them understanding the space and what the tools and solutions are that are being built right now and how they can access those utilities, as Neil said, and infrastructures.
Two hats. One as my capacity as an advisor to EFF, and also as Chief Operating Officer at McLEAR. So I'm going to give you a quick walkthrough of the journey that we have come from and being a wearable fintech company. We're going to talk about the journey to contactless and away from cash. But as I always say, I like to walk through these journeys, and I like to look at where we have come from. And there's some really interesting statistics looking at the contactless space and how contactless has evolved. And if you look really at 1995 all the way through to 2008, 1995 really saw globally the first adoption of contactless as a technology, and that really was used for transport. And most of us would assume that contactless is a technology, and you would associate that with payment. And just around about the same time, going into 1996, Mobile in the US launched their Speed Pass. And again, it was using contactless as a technology for something that wasn't payment orientated. And as you move forward from 2004, 2008, and all the way into 2011, you really start to see the momentum from payment networks starting to mandate the issuance and acceptance globally would start to accept this new technology. And then you started to see the emergence of some of the bigger players in the wearable space, smart technology space, smartphones, start to incorporate NFC as a type of technology, all the way through to where we are today with the current pandemic driving different changes.
We're a B2B fintech, and what I would say is that lenders are very sharp. I think what we try and do is go to them and shoulder some of the heavy lifting when it comes to the same three things I said before. What's the alternative data that's out there? How can it be used? And how do they sort of continue, first engage with it, continue to use it and improve it, or improve their use of it? The advantage, of course, is to them from the balance sheet perspective and also the online lending perspective. But what ends up happening is that folks who otherwise wouldn't get loans get those loans. And so that is really one of those two factors are things that we care about. And when it comes to education, I don't know if we look at it so much as education. Perhaps we look at it as partnering to again shoulder some of the heavy lift, do some of the frankly the less sexy things that need to be done in order to integrate with these data sources, find out that they exist first and integrate with them, and really partner with the banks.
I think Gopal hit on one of the topics that I wanted to touch on too, and that's people that are high touch, and the unbanked are high touch, the unconnected are even more high touch. And it's one of the problems that has been created by closures of bank branches and lack of access to products